Hi, everyone. Welcome. You are in the right place. We're just going to give a minute or two for you guys all to come into the webinar, but welcome.
Hi, everyone. Hopefully y'all can hear me okay.
All right, those coming in just now, we're just giving everybody just a minute or two to come in, and then we'll get started. So excited to have you all here today.
See some familiar names. Hi, everyone. I see some folks from my California clients. I see some, oh, there's one from my Texas clients. Hi, everyone. Let's
All
go into
right.
the names.
Hello, everyone, and welcome to the LSL webinar, Prepare for GASB 103 Changes, Get Ahead of the New Financial Reporting Model. We are happy to have you here with us today. And now, before I introduce our presenter, Kelly Telford, a few housekeeping items. This webinar is being recorded, so be on the lookout later today for an email containing a link to the recording as well as a copy of the slides. This webinar will run for 50 minutes with a 10-minute Q&A immediately following. If you have any questions for Kelly, please put them in the Q&A box located in the Zoom toolbar. To find that toolbar, hover your mouse over the top or bottom of your screen and a toolbar will pop up. This webinar is eligible for 1 hour of CPE credit. We will launch 4 polls throughout the presentation, so to receive credit, you must answer 3 of the 4 polling questions. And you also need to complete the short evaluation you receive afterwards. LSL is using a new CPE system, so please note that the evaluation email will be coming from LC Vista. It is a new system, so please allow up to 48 hours to receive your evaluation email. Again, that was LC Vista is the new CPE system. If you're having trouble seeing the polls, try minimizing your Zoom screen as sometimes the poll questions pop up behind it. You may need to click around and drag the Zoom screen around a bit to see. Now I'd like to introduce our presenter. Kelly Telford is a partner in LSL's Consulting and Advisory Department, bringing over 20 years of experience in working in and with government agencies. Her background as previous Director of Finance for city and county agencies gives her unique insight and specialized expertise in accounting and auditing, financial forecasting, and budget development, along with investment and grant management. With a passion for local government and extensive technical knowledge in government accounting, she has built an advisory practice where she and her team assist local governments with their finance, accounting, and operational needs every day. Kelly excels in transforming conventional approaches to more innovative methods that help organizations more easily develop a clear, defined path to accomplishing their goals and objectives. Her strategic focus on transparency and trust makes her one of the top consultants and speakers in the governmental industry. Okay, Kelly, take it away.
Thank you, Miss Cami. Hi, everyone. Welcome to our GASB 103 webinar. I know a lot of you are elbow deep in year-end close for 2024. Even our September 30 clients have started year-end close for 24. But with GASB 103 being issued earlier this year, I know it was a really big one that people were a little bit worried about. So I thought it'd be really relevant for us to have the conversation and at least get the word out there what GASB 103 is all about before we get to the end of the year. That way we can stop some panic and start to prepare early so that we make sure that we're ready for GASB 103. I'll ask for a little bit of grace on for me today. I'm a little under the weather, so I may mute myself for a moment and cough, and I may just need to take a drink of water, but we will get through this next hour. So what we're going to discuss over the next hour is, when is GASB 103 effective? What areas of the ACFR are impacted? What specifically needs to change in your ACFR? And you'll find that for some of you, the changes aren't going to be necessary because you're already reporting in the new way. And then how can we prepare early? All right, Cami, let's launch polling question number 1. So just how terrified are you with the changes that are coming with GASB 103? Not at all. We got this. A little, but we will survive. Or so worried that these changes are big. I'll give you just a moment to put your answer in. What I want to go through today is some information to help quell those fears, because the one piece of good news to take away from this is it isn't as bad as we thought it was going to be. So let's first go through, while everyone's answering their polling question, let's first go through what was the GASB originally considering. So when the initial invitation to comment was issued, it was all the way back in 2016. It was a long time ago. It was even before COVID. It had a very large scope being considered. They were looking at introducing different approaches for revenue recognition. We know we have the modified approach for governmental funds. We have full accrual in governmental funds or in proprietary and internal service funds. They were looking at something entirely different, no longer focusing on short-term and long-term, but adding a third called near-term. They were also looking at future projects to reformat the statement of activities, which happens to be the most complex statement to read in the ACFR. They were even contemplating whether or not governmental funds should have a cash flow statement. It really was going to be the first super substantial change since we implemented GASB 34. Now, fortunate or unfortunate, I was around when GASB 34 came into play, so I was able to see what pre-GASB 34 financials look like and compare them to what we have today. Based on that initial call for comments, it would have been significant. You can see here all of the iterations of the exposure draft, the document, and then the final pronouncement that was issued. If you focus on the dates, I mentioned that we did that invitation to comment back in 2016. Then about every 2 years until recent, they've been going through the process of evaluating what should change and what shouldn't. It really was when we saw the exposure draft that the comments came back pretty significant, that it was a heavy burden, given a lot of the implementations that we've done in local government over the past few years. And then when you look at the exposure draft to the final pronouncement, it's a pretty significant difference. And we're going to go through that today. But like I said, don't panic. It is not nearly as bad as we thought. All of those questions about whether we change the revenue recognition, whether or not we add a cash flow statement, at the end of the day, there are only 5 major changes. And we're going to go through all of those. And then I want to spend a few minutes walking through the ACFR sample that GASB actually included in GASB 103. All right. So the objective of GASB 103 was to improve key components of financial reporting. Again, it's an enhancement to the GASB 34 model. The specific changes impacted the management's discussion and analysis, unusual and infrequent items, proprietary fund statements, major component unit information. This is often your discretely presented component units, and then the budgetary comparison information. Now, the key concept with all of this is consistency and transparency. If you think of it from that frame of mind, when GASB set out to make these changes, they were looking for each government agency to report things consistently. So if you were comparing one city to its neighbor and you had both ACFRs, you could look at a statement and they were the same format, same account types, and you truly could compare apples to apples. Because there was some latitude given in GASB 34, some agencies were reporting things one way and others were reporting them a different way. The key focus is consistency. So at times you're going to hear me mention that, hey, you had options before, now you don't. Okay, so I really want to point out, for those of you who have been in some of my GASB implementation trainings, we often talk about the components of the GASB itself. The GASB always has the key standard information, which is this core section here. And you'll notice it's only 16 pages. It's very short. But the reality is the meat and potatoes of the GASB are going to be in the appendices, particularly in the background and the basis for conclusions. I want to point this out because as you're looking to any GASB for guidance or for implementation, really looking at these for direction. We saw this really bad with GASB 87 and GASB 96 for leases and SPIDAs. If you didn't read the basis for conclusions and understand the context of all of the GASB's determinations up here, a lot of it was missed. So I just wanted to point that out. A lot of the information that we're going to go through today may not be verbatim in the actual statement in pages 2 through 7. It's going to come from the basis for conclusions. And then I mentioned at the end, we'll go through this illustration here just briefly, that they actually gave you samples to look at. All right. So let's launch polling question number 2. We're going to go over what the effective date is for each fiscal year end. So let us know, what's your fiscal year end? And Cami, if you wouldn't mind, let us know what the poll results are. We'll keep it open for a minute or two. I'm interested because the next slide actually divvies it up by fiscal year. All right, well, Cami's finishing up the polling question. I wanted to include all of the current active GASBs that are still set to be implemented either currently or in the future. Many of you are going to be implementing GASB 100 for this fiscal year. I know we probably have a lot of June 30 year ends and September 30 year ends on the call today. So all of those clients will be implementing GASB 100 this year. In a lot of cases, that's your auditors that will be, if they write your financial statements. For GASB 103, for June 30 clients, it's going to be implemented June 30th, 2026. So we have a minute. Interesting. We have 20 clients with December 30 year ends. So for your December 30 year ends, just a heads up, some of these GASBs are a little bit earlier. For instance, compensated absences, you are the anomaly. I have one accounting services client that's 12/31. We have to implement GASB 101 early for you because of the way that the dates worked for that GASB. So just put that on your radar. GASB 101 is effective for you December 31 clients for 2024. All right. Thanks, Cami. So I mentioned there's 5 key changes that are impacted in the ACFR for this GASB. Let's dig into what those are. The first one is the management's discussion and analysis. There's a lot of words on this screen. It's really for you to have the slide deck when you're done. But the big focus on the changes for the MD&A is to truly tell the story about what happened. The auditors aren't responsible for reviewing or attesting to the management's discussion and analysis. Auditors are responsible for ensuring consistency. For instance, if you have the numbers in your MD&A for your statement of net position or statement of activities, the auditors do tie those numbers out to make sure they're consistent with the rest of the report. But your explanations that are included aren't reviewed for context. That's management's responsibility. But one of the things that GASB recognized when they were doing the call for comments is that a lot of organizations had a management's discussion and analysis template, and all they did was go update the numbers every year. And the numbers would say something like, the statement of net position reported total assets of $100 million for 2024 and $98 million for 2023, resulting in a $2 million increase during the current year. And they would it was a statement of fact, but then they wouldn't explain why it went up. This was actually very common in smaller organizations who maybe have more limited staff. Maybe there's, you don't have, I know at most of the organizations I've been a finance director at, I've been blessed to have either an assistant finance director or a finance manager who was able to work on the MD&A with me. But if you have organizations where you only have, one person in management, sometimes you just don't have the capacity to give that detail. But GASB is saying now you have to explain what happened. The biggest piece is to show what those material explanations are and why. You know, if a grant revenue increased, explain that it was because the city was awarded and spent XYZ grant during the fiscal year. If it's related to, you know, maybe you have personnel costs that went up and it's related to the budgeting of 4 new FTEs during the fiscal year, whatever it might be, the readers of the financials need to have detailed information on why those fluctuations happened. It also now requires very specific information to be disclosed related to capital assets and long-term debt. So I'll show you in the example, the GASB does give you what they want it to look like. It's still focusing on facts. There is still a section at the very end that talks about economic conditions, things like that, but they really want to focus on telling the story of what happened during the year. We talked about explaining the variances. It really should discuss both the positive and negative impacts on the current year. I would say think about materiality. Think of your organization and what is material to the users of your financials. It could be something as small as $50,000. It could be, you know, I know a couple of the folks are from one of my large water districts. Explaining something that's $50,000 means your MD&A is going to be 500 pages. So think of how the users of the financials want the information and what is significant to them. If there's already something in the financials where it explains it, reference the footnote as discussed in footnote 4, and then go into a very brief explanation, but don't duplicate, don't copy and paste that information, avoid that duplication. One of the things that they also focused on in GASB 103 is to focus on the primary government. They were finding that there was a lot of explanation related to discretely presented component units, and some of those discretely presented component units could be significant to the users of your financials. But keep those explanations brief. The overwhelming, I'd say 90-95% of the MD&A should be on your governmental and business type activities. So when you're going through and you're detailing out what happened during the year, again, explain why they changed from the prior year and what the magnitude of that change is, both positive or negative. Include any facts, decisions, or conditions that they may not be aware of that caused that variance. Look at your fund balance analysis and summarize any significant changes in your major funds. If you have a special revenue fund that triggers as a major fund and the fund balance went up by 20%, you should have an explanation in your MD&A as to why. And then again, current known facts, decisions, or conditions about events that would impact the future. So our year end, I'll use June 30th since that's the majority of our audience. Our year end being June 30th, we're now a little over 3 months past the balance sheet date. What are the current known facts today that could impact those numbers in the future? If you've seen agenda reports go through where maybe there's a significant revenue stream, maybe you passed, you know, in November, you pass a sales tax measure and your financials don't get issued until January. Well, that's a significant impact for future years. And that probably should be a subsequent event in the financial statements. If, you know, at a very minimum, I would put it in the economic piece of your MD&A and explain that it was approved by the voters. It's expected to impact the revenue streams starting in fiscal year 26, and the revenue estimates are expected to increase by X amount. All of that is a part of the ballot measure, but that's a good example of what that future impact would be. All right, so GASB also redefined special items and extraordinary items, and they are now calling them unusual and infrequent. So they're explaining that really the definition didn't change. We used to explain extraordinary and special items as infrequent unusual in nature and infrequent in occurrence. The definition is the same, but organizations were having a really tough time making the determination between whether or not it was an extraordinary item or a special item. I can tell you, I had a client a couple of years ago, very similar situation. They thought that it qualified as extraordinary. I asked, because it is a management assertion, I asked management to explain to me why they thought it rose to extraordinary versus special. We just have to document it in our work papers. The reality is it doesn't matter. It's still called out separately. It's still below operating income. So GASB recognized this, and now there's one category. The one thing that they are calling out, again, in an effort for consistency and transparency, is that it be separated by item, by event, rather than all of it being netted together. So I mentioned there's no extraordinary or special items. Now this only starts when we implement 103. So it's possible you could still have an extraordinary or special item for your 24 financials. Each item will be separated out. You very well could have 2 or 3 depending on what they are. Just make sure that you're not netting the transactions together and calling them an unusual or infrequent item. They should be descriptive enough for someone to understand what it is. There's also a required footnote disclosure that goes through what program or function, for instance, if it's a unique expense, or like the one that I had for one of my clients was a lease revenue, but it was a lease revenue outside of GASB 87. And it was very unusual and infrequent for that particular client and the business that they're in. They're a special district, they're not a city. So the footnote will go through what program is impacted or function, depending on what you report. And then any other identifiable activity that unusual or infrequent item relates to. And the big thing here, that footnote disclosure is supposed to indicate whether or not it was within management's control. So in the circumstance for the client that I was mentioning, it was within management's control. Management negotiated a new land lease that was a $100 million land lease. It was a lot. And it just so happened that it was, a land that was for city purposes or for special district purposes that they had been holding on to for over a decade and had ultimately decided they weren't going to build on it and changed its business purpose. I would have disclosed that was within management's control because of the negotiated lease. Something that's infrequent in nature, that would also qualify as an unusual item that isn't within management's control. Could be COVID. It could be the dissolution of redevelopment for California folks who were around 10 years ago, 12 years ago. Those are outside of management's control. My personal recommendation would be, if it's not within management's control, indicate whose control it is in. For instance, the dissolution of redevelopment would have been predicated by the state of California. The one thing that the respondents to the exposure draft asked about the unusual and infrequent items is whether or not there was going to be criteria that would be established so that we truly could compare apples to apples. In the basis for conclusions, GASB did contemplate this, but when organizations submitted content as to what their unusual and infrequent items had been in the past, it was all over the map. And they realized that it really lacked the ability to apply consistent criteria. So it is still subjective. It is still going to be a management's assertion whether something rises to that level. I will say, just side note, be prepared. If you do think something is so significant, just be prepared to provide that information to your auditors why you think it rises to that level, and shouldn't be classified in your normal revenues and expenses the way the rest of your financials are categorized. All right. I don't see any questions so far. These two topics have been pretty easy and straightforward. All right, let's launch polling question number 3. How often does your organization have unusual or infrequent items? Once in a blue moon? Never in my tenure here? Or only when the auditors tell us to report one? And that last one does happen. There are circumstances where we will see something. Say you have a large, use that lease revenue example for my special district. If we would have included that as a part of operating or non-operating revenue, and they present comparatives, it would have significantly distorted the comparability of the financials of that income statement. So in that example, had they not called out the unusual or infrequent item, the auditors very well may have come in and said, hey, you know, this, for the readers of the financials, this is pretty substantial. It is very infrequent, hasn't happened ever before, and really should be called out separately. So that last one does happen. All right. So while everyone's finishing those questions or those polls, let's move on to the third section. Proprietary fund statements. So I see Patricia White, hurricanes have heavy impacts on our financials, but not considered unusual or frequent. Patricia, should I understand that you're probably either in Texas, Louisiana, Alabama, Mississippi, or Florida? Because I'm probably, yep, I was going to say probably Florida. You're absolutely right. It really has to be something that infrequent piece. Hurricanes, I'm in Texas. We were hit by hurricane. We were literally direct hit Hurricane Beryl where I am. And they're not considered that infrequent along the Gulf Coast. Even along the Atlantic coast of Florida, they're not considered that infrequent. It would be very similar to North Texas or anywhere up in Tornado Alley being hit by tornadoes. You know, that kind of damage FEMA claims are pretty common in those parts of the country. Even sometimes there's with the earthquakes in California, depending on the size of the earthquake, those are pretty common in California. Now, if you have an 8.0 earthquake, that's uncommon. But you're absolutely right, Patricia. Good point. All right, let's dig into the proprietary fund financials. Now, if you're going to zone out in any part of this presentation, this might be the part. And I say that because for the most part, organizations are already following this, particularly if LSL is your auditor and we prepare your financials, we use a template that has all of the categories already laid out. So for the most part, not that we did this intentionally, but because this is one of the areas where GASB allowed for organizations to report the income statement differently, we were always reporting it pretty consistent. So let's go through a little bit of the changes. So we've always distinguished on the proprietary fund financials. This is focusing on your income statement, by the way. We've always distinguished the income statement between operating and non-operating. And this is both revenues and expenses. And you'll remember we have operating revenue, operating expenses, net income, and then non-operating revenues and expenses are all in one section. So you'll have positives and negatives throughout that section. But what GASB did here is they did a better job for us of defining what goes in operating and what goes in non-operating. So non-operating revenues and expenses are defined as subsidies received and provided, so revenues and expenses, contributions to permanent and term endowments. These are super rare for our clients. I think I've had one client in my 22-year career that had an endowment. Revenues and expenses relating to financing. So think of bond issuances, like your cost of issuance. Think of investment income. Those are going to be related to financing. Resources from the disposal of capital assets and inventory. That's your gain loss. And then I mentioned, they have the financing being debt, and then you have your investment income and related expenses. And that could be amortization of investments, any number of things, right? But we have these 5 criteria, we not say 10. We have 5 criteria that distinguished what is non-operating revenues and expenses. That's it. There's no other, there's no miscellaneous, there's nothing that says, it could also include this. It's 5. And what GASB is now saying, if it's not one of those 5, it's operating. And it doesn't matter what type of entity you are. If you're a water district, an airport district, a sanitation district, it does not matter what type of entity this is for. They're distinguishing those non-operating revenues and expenses as those 5. Everything else goes to operating. I'm going to give you a little caveat here in just one sec. So you have to follow the GASB's definition. However, there is an optional approach for non-capital subsidies. And I put this in here, this self-sustaining versus subsidized approach. I put that in there because in the basis for conclusions, there's a really good discussion about why they took the approach that they did. And I really think it's helpful for organizations, as you're looking at this, as you're trying to figure out if the classifications on your income statement are correct. And I'm thinking of some of my large water districts that are on this call. It's going to be really important for you guys to go in and look at those 5 non-operating categories. It does allow for this optional approach for non-capital subsidies if those subsidies are received on a regular basis. So think of a city that has numerous governmental funds, a general fund particularly, and then it also is a public utility with water, sanitation, trash, any public utility you want, electric, gas. If the general fund is regularly subsidizing the public utility, maybe the council hasn't had an appetite for increasing rates and they haven't wanted to do studies to determine what those rates should be. Maybe it's the opposite direction. In some states, we don't have the regulation that precludes us from taking a public utilities revenues and giving it to the general fund. Every state has different regulations on the public utilities. If those subsidies are happening regularly, then you can include those as a part of operating income or loss. Here's an example of what it looks like. This is the only change that for LSL's assurance clients, this is really one of the only changes that you'll have to pay attention to, and it's optional. You don't have to do it. You can still include the non-capital subsidies as non-operating. So you can see here you have operating revenues, operating expenses, operating income or loss, and then there's a separate section for non-capital subsidies. And then we have another operating income loss and non-capital subsidies. I don't expect to see this. I don't expect to see this a ton. I can see it happening. I have a client here in Texas. We're not their auditors, but we're their accounting services consultants. I can see them reporting something like this in their public utility because the public utility regularly supplements the general fund. All of them do. There's 5 or 6 different utility funds. And those utility funds are regularly transferring excess cash to the general fund to fund city services. I could see this in a situation. I had a client, it was probably 15 years ago, out on the way to Palm Springs. They were super particular about not increasing utility rates. Their council didn't have an appetite for it. They knew that the public utilities were upside down, but did not think they were going to be successful if they attempted to take it to the voters to increase those rates. So the general fund was regularly having to subsidize the utility funds. In fact, we even wrote it up in our management letter that we had noticed the subsidy and we had even evaluated a going concern for those utilities. But that could qualify here as a non-capital subsidy coming into the utility. I don't think it's going to be common. Other than that, even though they delineated operating from non-operating from a definition perspective, I don't think it's going to significantly change at all how LSL presents our financial statements. We've already been showing those classifications. For some clients who prepare their own financials, I could see some evaluation happening and really looking at whether or not the non-operating fits within those 5 categories. But I don't think this is going to have a huge impact if LSL prepares your financials. I also wanted to point out, we were talking about unusual or infrequent items. This is what it would look like. And again, they say detailed. It shouldn't be just a single line for any of these. It should be descriptive enough to understand what the transactions are. All right, 3 down, 2 to go. Major component unit information. This really is focusing on discretely presented component units. It allows for a different presentation if you have so many discretely presented component units that it impacts readability of the financials. Right now, we have discretely presented component units are usually separate columns on the statement of activities or statement of net position. They're separate rows on the statement of activities. And depending on the volume, it can be a lot. So if they impact the readability of the financials, it does allow for a new statement to be created. That would be a combining statement of major component units. So let me show you what that looks like. Let me just make sure there's nothing here. Yeah, so they'll be in that combining statement. In the combining statement, you'll have detailed columns, which I'll show you in just a second. But then in the statement of net position or statement of activities, it will be a single aggregate column like this. So here's the example from GASB 103. It shows the statement of activities the way that we all normally see it. And then it shows a column for component units. And this is plural. There's more than one sitting here. If there's only one, you should be putting the name of the component unit and not doing a combining statement. But if you have multiple, combine them here together with the total. You see this negative 8622. And then there's a new statement that you can include that is combining. And it shows the component units. You see here 8622. It shows them by individual component unit. You can see that it still does major versus non-major component units. So this is new. This would actually go at the very end of the main statements behind your fiduciary fund financials. Kind of odd. I had a couple of component units when I was with LACDA. I don't think we had any at Costa Mesa or Seal Beach. But I have seen some organizations, particularly large organizations, have a few like this does. So I can see where this might be helpful to make it a little bit less confusing. I don't think it's super impactful for most of our clients. All right. Last but not least, budgetary comparison information. This is one of the ones where GASB ended up finding that organizations were differing on how they were presenting budgetary comparison info, particularly where the information was reported. So back in the day, when GASB 34 was first implemented, LSL would present the general fund and each major special revenue fund. The budgetary comparison schedule was a statement. It would go right after the fiduciary activities in front of the footnotes. That was early on, probably 2010, 11, somewhere around there. We started moving it to RSI. Some organizations always had it in RSI. So what GASB is now saying is, no, we will have a single method for reporting it, which is RSI. So from now on, well, implementation of GASB 103 forward, The budgetary comparison information will be RSI going forward. You should not have any budgetary comparison information that's a statement. That's before your footnotes. They also wanted to ensure consistency in what the presentation looked like, that it needed to have variances between original and final budget and variances between final and the actual amounts that tie to the financials. And then there should be a notes to RSI. This is a little bit new, so let's flag this. There should be an explanation of significant variances in the notes to RSI. That's new. I know for LSL, we would go through budgetary policies in the RSI. We would talk about any deficit fund balances, any expenditures over appropriations, but we didn't really give an explanation of what changed and why. So this is a new requirement. And this is what the statement itself will look like. You'll have your original and final budget with a variance basically detailing out what the budget change was. LSL doesn't have this column right now. And then you'll have your actuals, which will tie to your financial statements. And then you'll have the budget variance column. Some organizations were, I mean, I've seen a few different, I do ACFR reviews for GFOA, and I've seen some very different presentations. This reconciliation to GAAP basis is still a requirement. I want to say I've probably only had 3 clients. I've only had 3 clients my entire 22 years that have actually had this reconciliation down here because they report this on a budgetary basis, not a GAAP basis. Miss Tammy. Hi, Miss Tammy. Is there a reason for choosing RSI over statement? You know, I don't recall from reading it. I think it had to do with it being supplementary to the main financials, and they didn't want it to take away from the primary financials. But I will make a note from you, Tammy, and I will email you. I'll double check in the basis for conclusions, but I'm pretty sure it'll be there. Oh, you probably, Tammy, you prepare your own financials, so you probably have our old model. Yeah, we changed it probably, like I said, probably about 2010. Sorry, folks. Tammy's messaging in the chat if you're not watching that. Yeah, now we report all, for the most part, it's all in the RSIs. I'll shoot you some information on that, Tammy. And if anybody else wants more information on that, just reach out and let me know. Tammy, gotta write your name down or I'm gonna forget. All right. So there's 5 major changes, right? All in all, that's not that bad. Like we've talked about GASB 103. Well, we've talked about the changes to the financial reporting model for years. And I don't know about you, but I was really, really worried. And when I saw the GASB come out earlier this year, I immediately went to go see how bad it was. And when I saw that it wasn't that long, figured it couldn't be that bad. So those 5 changes, many organizations are already detailing out explanations for their MD&A. The likelihood of a significant change for that is pretty small. Many of them are just going to need to add the column for the budgetary comparison from original adopted to final budget. Not a huge impact, and maybe move it where it is in the financials. The infrequent and unusual items, no pun intended, but they're so infrequent that we don't really see that all that often. So I don't think that's going to be a major impact. The discretely presented component units, again, it's not all that common. So we'll have some clients that are impacted, but not a lot. And then, the proprietary fund financials. I mean, most of us were already using those 5 criteria unless there was something unusual that came through for the income statement for proprietary funds. All in all, those 5 changes aren't that significant compared to what they were considering. What they were originally considering would have had a hefty impact on us. But it doesn't mean that we don't need to prepare. We're all going through year-end close right now. Many of you will be working on your financials. Tammy, you're probably already working on your financials. So what can we do to prepare early so that we're ready for go live on this? And don't forget, you can implement early. If these aren't significant impacts and you want to implement 103 early, by all means, it is always encouraged. So for the MD&A, biggest recommendation on that is to implement, take your template, usually your Word and Excel templates, go through and see if you're giving detailed explanations. See if you're just, are you just explaining, hey, there was an increase of this amount, year over year, or are you saying what happened? Remember, tell the story. Update your template. And I always just say because ... And then I highlight the because ... And that's my reminder to go include the explanation. Again, unusual and infrequent items, you're not likely to need preparation for this. Just be aware of it. And then during the year, if there's anything that's super unusual, has to be large magnitude, but if there's anything that's super unusual, flag it. Pull the agenda report or, whatever, an invoice, whatever it might be, or an agreement, pull it aside and bring it up to your auditors during interim and ask, hey, this is a little bit unusual. I don't know how significant it's going to be, but do you think we should separate this out? Always good to be proactive than reactive. For the proprietary fund financials, if you prepare your own, just double check the format, make sure it complies. Again, operating versus non-operating. If you want that subsidy to be included as a part of operating, you will need to make those adjustments. If LSL prepares your financials, or if you have a different auditor, if your auditors prepare your financials, they will likely make these adjustments for you. You don't have to do anything. But if you do, make sure you update your template early. For your major component units, just double check to see if it even applies. If you prepare your own financials, then you likely know. If you don't, just open up your Act for Draft and see if it has that discretely presented component unit column shown. If your auditors prepare your financials, they will likely make this change for you. But if you prepare your own, update that template early. And then, of course, the budgetary comparison information, most are already RSI. It was not wrong to include it as a statement. That was one of the things that they allowed in GASB 34. It wasn't required to be RSI. But if you're not including it as RSI, when you implement 103, we'll make sure we push it to the back or behind the footnotes. Again, auditors, if they prepare your financials, they will likely do this for you. If you prepare your own, just make sure that you're adding that one column for your variance from original budget to adopted. And then just make sure that you're moving them behind the footnotes and including the explanations in your notes to RSI. All right, I had a couple questions. Let me see. So Heidi has a good question about proprietary fund transfers, that they would now need to be included as non-capital subsidies. She wanted to see that slide again. So let's go back for just a second because we do have a minute. So this is an optional change. This is not a required. You can still include that as a part below your non-operating. If you go to the basis for conclusions, Heidi, you'll see there's a whole section under proprietary fund financials for the basis of conclusions that'll explain this non-capital subsidies. In fact, this is going to be the next thing I was going to show you. I think you guys can all see the GASB itself. This is GASB 103. In the basis for conclusions, there is a whole section on that approach. So in here, it talks about, remember I mentioned the self-sustaining and subsidized approach, and then it talks about the subsidized, the non-capital subsidies. So I would go down to this section, Heidi, and read through it. I would only do it if it was consistent and every year. And if it was, I would do it only if it was operating in nature. For instance, the cost of operating the utility required the subsidy from the general fund or another fund, and then vice versa. I mentioned my city here in Texas. The public utilities subsidize the general fund, and it's required to be able to pay for all of the city services of the general fund, police, fire, city staff, operations. I would only include it this way if it is required for operations and if it's consistent enough to where either the general government or the utility couldn't function without it. I think, so we are to add a column on our budget statement that compares, yes. In the example, Patricia's asking about the budget statement. In the example, there is now a budget comparison. Again, a huge piece of what GASB is trying to do with 103 is provide consistency between organizations. So if I live in Costa Mesa and I'm trying to compare Huntington Beach, which is right next door, I should be able to pull up a comparison and see the same information being presented for both. So that's the reason now all of them should look like this. So I do want to show, I want you guys to know there is a very detailed ACFR example in GASB 103. It's part of the reason there's so many pages to it. Really good example. You've seen some of the snips from it. Really good example to go through when you're reading the GASB and you're trying to figure out exactly what it's supposed to look like. Come in here, you can see all of it. Statement of net position, statement of activities, balance sheet, statement of revenues and expenditures and changes in fund balance, proprietary statement of net position, and so forth. The whole thing is in here. And it's really good to go through and see exactly what they want to change. Brenda, I'm not sure. Brenda's asking, if you don't have any changes between the original and final budget, can you present one column that says original and final? I'd have to go see if there's a specific question, if that was a consideration when in GASB 103's basis for conclusions. It's likely something that can easily be a question posed to GASB. We do have a number of clients, or a handful, that don't do amendments throughout the year. Brenda, if you want to reach out to me separate, I'm happy to pose that question to GASB on your behalf and help you with answering that question. That's actually a really good question. All right, let's launch polling question number 4. Do you plan to prepare early to make implementation a breeze? Absolutely, we got this. Well, we hope to, but we'll see. We would like to, but probably not. Or not a chance, we love the stress. I will tell you, I have a soft place in my heart for all of my government agency clients, because I remember, it's only been 3 years since I've been a finance director, and I felt like we were always short-staffed. We were always running behind. It felt like it was impossible to get ahead and to really be proactive instead of reactive. And there was no way I was planning ahead for updating my financial statements before I actually had to work on my financial statements. So I would not be surprised if a lot of the answers is we would like to, but probably not, or we hope to, but we will see. Luckily, these aren't huge, impactful changes. They're pretty small considering, but I will say I fully expect GASB to come out with some pretty significant changes in the future. I think they're going to reevaluate all of the things that they were looking at in the initial call for questions or call for comments. I think they're still going to make all those changes. I think they're just trying to let us catch up, and they are making the changes that were the most impactful, and then they're considering the real earth-shattering changes a little bit later. All right, so we've finished the poll. Just as I suspected, the majority are we hope to, but we'll see. I love the clients who are saying, absolutely, we got this. Tammy, I expect that that's how you answered, because I know you're really good at your financials. The folks who are saying not a chance, we love the stress. I know you're probably one of the organizations that we work with that is just perpetually short-staffed and has turnover. And as much as you would like to, you just don't have the opportunity to. If you guys need help with this at all, if you prepare your own financials, or if you use, I know some of you use Gail's GASB template, for caseware. Or you maybe you even use her Workiva. Gail's team, our technology consulting team, does a lot of Workiva implementations. Feel free to reach out to us. Gail's GASB template will be updated for these when they become applicable. But if you need any help, by all means, just reach out to us and we're happy to assist, whether it's the consulting team or the audit team. We all work together. All right. I know we've been answering questions along the way. I think I got all of them as we were going, but if I didn't, by all means, here is all my email will be on the next slide. I do want to plug, we're doing a presentation on November 7th. So just about a month away, for all of you finance directors or HR directors or treasurers, super, super important webinar coming up. Understanding our fiduciary obligations for 457 and 401B plans or 401A plans. When I was a finance director, I didn't quite understand that I had a significant responsibility for administering the 457 plans or 401A plans for my organizations. And there's been some eye-opening conversations since I came back to this side of the table. And there's also been some lawsuits out there where individuals have been suing both private companies and local governments for not administering the plans in the best interest of the employees. So I really wanted to make sure we brought this information to you. We're going to be doing a multi-part series. The first one is, are you meeting your fiduciary obligations and understanding your role? And then the second one will be, what can you do to be able to meet those requirements? So that's on November 7th at 1:30. I believe the information will be posted on the website when the signups are available. If you do have questions, you are welcome to reach out to contact us at lslcpas.com. My personal email is kelly.telford@lslcpas.com. You're always welcome to shoot me an email. Just be patient. Sometimes I'm traveling and it takes me a minute to get back to you, but I'm happy to assist or answer any questions y'all may have. Otherwise, y'all have a wonderful day. Thank you so much for participating in the GASB 103 presentation today. I appreciate all of you. Bye, everyone.